Hi there, guys. Hope everybody has had a good trading week. This is the weekly breakdown for the Sunday, where I break down a trade that I have taken in the week. As it stands right now, it is currently Tuesday, and I am actively in this position that we are looking at right now. The left-hand side is just to show you proof of concept that I am actually in the trade, because I know some people like to, comment and stuff like that. So yeah, this on the left shows that I'm in the trade, but that's not the reason I'm making this video. I want to break down why I'm in the trade, how I'm managing it, and then I'm going to go from there. So if we look, this trade was actually taken on the daily time frame, and I'm going to remove all my drawings, and we're going to start from scratch. So what I noticed yesterday being Tuesday, is that price on GU was very bullish and it was overextended. And I was expecting a price pullback at some point. Now, the way that I trade is all limit orders. So it's really good for if you've, got a job or you just can't sit on the screen all day. So it's mainly just like a set and forget type of strategy. So the main thing I noticed initially, if you've watched my previous videos, is that I had a trend line. So I have done a video on the past in trend lines, third touch trend lines, and how to use them. So obviously, if you haven't seen that video, try find it on my channel. So third touch trend line. This third touch trend line basically for me indicates that this is the top of a channel. One touch, two touch, then becomes a valid trend line. You can't just create a trend line out of, a candle body closing. It has to obviously be two substantial highs or lows. I then decided that if price was pushing so hard and looking into this area, I need to obviously build some confluence and have reasons to enter the trade before I just hop into it and hope for the best. So I've gone over in the past key levels on profit taking highs. So if we were to look at this trade here, this was the high within the market. So basically, a lot of the time, as you see with highs and lows, is that especially on the daily time frame, is that when price comes back into levels of highs, lows, etc., you a lot of the time will get some form of reaction. Now, not every time, so don't just go setting orders on highs and lows, but it is something to keep in mind. So I had this high in mind. I had the third touch trend line, and then I also noticed that this high was also at the round number of 128.50. So therefore, that allowed me to have a confluence area where it involved three reasons I was entering this trade. Now, I will only take a trade with minimum three reasons, just because they're the strongest. More reasons, the better, like any strategy. So what I then did, I set my limit order 5 pips below, because being 5 pips below ensures that I get into the position. I identified that the high and my last confluence was 15 pips away, so I decided to have a 30 pip stop loss. And then when I was looking at the market structure of the market, I noticed that there was like a break retest high here. So for that reason, I decided this would be my TP1. Now that is at 65 pips, but I've decided to do TP1 at 60 just to make sure that price obviously doesn't bounce just before the level. So if we play out then what's happened, yesterday the daily candle came into my area, triggered me, as we saw at the start with my proof of being in the trade. And then now I am still in this position and price looks like this. So if we go into the 15-minute time frame, you can see that price came up into the area and absolutely sniped the level before pushing down. And then following that, you can see that price is now pushing down nicely. Yes, price did pull back, but I moved my stop loss to break even after about 30 pips. So for that reason, I'm risk free on the trade. So it doesn't matter what happens if I, go back all the way up here. I won't lose anything. So I'm trade managed. Okay. So now what I'm going to do, I'm just going to wait for this trade to play out. I will update the video as and when something happens, whether it's TP, break even, whatever it is. So yeah, that's the reasoning for being in the trade. And we will update the video once I have the result. So then, guys, it is currently the next day. So it's currently Wednesday. This is the aftermath of what's happened. As you can see, I'm still in the trade with my runner. So this is the kind of risk to reward tool section that I had up for the 2-to-1. You can see that it was hit yesterday. I was actually at the gym whilst this hit TP. As mentioned previously, the way I trade, it allows me to obviously do stuff throughout the day, etc., etc. I don't have to be sat on my screen. So this is a prime example of that happening. So we've gone over why I took the trade. We've gone over the TP hitting now for 2R. So the last bit I want to go over now is what to do next. So you can see here that I've got my TP for this position set down there. And you can see I've got a position here with the stop loss down there. Why is that the case? So I've identified here that I've got a 38 Fibonacci, a round number, and an EMA. So for that reason, I am comfortable that I want to take a position here. So what I will do now is that if I was to look to take a position here, what I've done is set my pending around that area. And what all I've done, I've given it a 20 pip stop. Okay, easy as that. So now what I have done, I've put my TP for this trade here, meaning if this buy loses, this trade will be closed for a 3.5. So let's just assume for easy maths, I risked $1,000 on this top position and I've left quarter of the position. So I closed 75% at TP1, which meant I banked 1.5% from this position on the sell. I still now have 0.25% risk. And if we have risked 1,000 on the position, that means that the remaining percentage is $250 per 1R, which 1R on this position is 30 pips. Okay? So now what I can do following that is that assume that this trade goes down to here, it will be running 105 pips, which 105 pips is obviously 3.5R. So then what you end up doing is doing the $250 times by the 3.5R. Because if you're looking at this position here, you're basically saying that it's going to be running 3.5 times my stop loss at 250, which is 875. So then what I can do is two things. I can either risk 875 on this position, and then basically if it was to lose, I don't lose anything. Or what I do instead, I risk 1%, which I normally would, plus the $875, which would then mean it's a 1,875 position. So from risking 1,000 up here, I've managed to bank 1,500. So I've already made that. And then now I will potentially be able to risk 1,875 on this position without risking that full amount. I'd actually only risk 1%. Because if I'd have closed full TP anyway, I'd be taking this position with 1%. So it just allows me to take the position, risk what I normally would, but also add to it. And that is basically the power of the way that I trade. So that's the plan with this trade now. I've set these positions. I probably won't post the follow-up to this trade unless obviously it plays out pretty soon. But yeah, that is basically it for this position here. And obviously we can go over the next position should it happen. So I'm hopeful, guys, that you've learned something from this way of the analysis, whether it's the reason I got into the trade, the runners, the increase in the risk, etc. So every Sunday, guys, I do post one of these videos. So if you do like it, please just drop a comment or like the video, and I'll see you in the next